Suntory is actually buying U.S. distiller Beam for $16 billion. That's a 25% premium. Get this, it's going to be the world's third largest premium spirits company. So your maker's mark is now going to be coming from Japan. So it's interesting here. It's going to help bulk up the overseas expansion, even though there's not a lot of cost synergies here for Suntory.
I think that you're going to find that the wax distribution on Maker's Mark is going to be much more consistent across the bottles now.
And they were already going to have a...
Really? Is that the outcome of this?
It's a major one. There's no way the Japanese corporation is going to allow that level of, you know...
There's way too much waste going on.
What this actually speaks to, a Sanford Bernstein analyst pointed this out, the reason why the deal took place now, you have the strong yen, you also have the low interest rates, so sort of spurred on, despite the fact they had to pay a 25% premium, despite the fact that there's not a lot of cost synergies.
I want Ian Bremmer's report on Japanese whiskey. How good does it taste?
Does it taste different?
You'd have to ask Bill Murray. I'm really not the guy.
You're not a Japanese whiskey drinker?
No.
Is anyone here a Japanese whiskey
I'm going to be now, apparently,
yes,
because they're picking it up. But no, look, they're sitting on a lot of cash. The Japanese industry feels really good about Abenomics. They're going to feel good about it in 2014. They're going to start paying higher wages. And they understand that the Japanese market itself is not where they want to throw all that cash. So we're going to see a lot more.
This is the key, though. We could see more Japanese companies, right, do this, what do you want to call it, cross-border M&A. We saw SoftBank come in with Sprint, now Suntory.
Well, they need to find more customers.
And they're not going to China.
Right.
So this is where they're going.
All right, we got another company making some news this morning, Wendy's. We go from alcohol to food.
Wendy's seeing a huge jump in the pre-market. Their 2014 outlook actually topping estimates. On the high end, they can make about 30 cents a share. Comp sales, though, is the biggie here, up almost 3.5%. Here's the interesting part, is Wendy's has been terrible. They've had a really hard time staying relevant, a really hard time remodeling itself, and is trying to sort of invest this new blood, remodel their stores, about 25% of their stores this year, and this was sort of a positive indication that perhaps that could actually work.
They needed to remodel those stores. They really did. Well, they were feeling pretty tired.
Yeah, and it really speaks, I mean, when was the last time you guys ate at Wendy's? Eric, I'm looking at you because I know you get your breakfast at high school.
Yeah.
But this speaks to the issue of the fast food restaurants, from McDonald's to Burger King, etc., because you're dealing with low margins, because the dollar menu is what drives a lot of the sales. You're also looking at that trend to organic and customization, which is
pressure on minimum wage,
really well.
which
exactly.
is hugely problematic for them in 2014. It's not going to pass, but it's certainly going to, you know, squeeze them in terms of shareholders.
But regardless, we're looking at a 9% increase for the nation this year, regardless of what Congress winds up doing for the minimum wage, and you have to raise costs to do that. And these kind of restaurants, like, what's the pricing power here?
Trish, when's the last time you were in a Wendy's?
Never.
I mean, it's been a while. So
Look,
that may be why I think it's so dated. It's been a while as I think about it.
If you had to choose between one, among all the fast food chains, where are you going to eat? Chipotle.
Why? Why is that? Is it a customization thing? You get what you want when you want it at that time?
No, it's because 3/4 of my staff has lunch there every day. So